What's up, members? Welcome back. In today's video, we're going to break down my 9:30 to 10:30 dip buying strategy, including RSI and the 1 minute and the 5 minute chart. I made $1,000 trading Apple, and I'm going to show you how I did this. So anytime that I am trading a dip buying opportunity, it's normally on a big cap stock such as Apple, Tesla, a Magnificent Seven. I'm looking for big moves like this. So I'm going to start to zoom in so we can see. Apple sold off very violently, very quickly. Within a couple of minutes on the 1 minute chart, it has sold off all the way. Now, how do you know where your entry is going to be? There's a few things we're looking for, and we are looking for points of support that where we could say, okay, I'm okay buying at this level if three indicators line up. And this is how I do it. So I'm going to show you that Apple, a few days ago, which was about 2-3 weeks ago, you can see that there was support around this 195 to 193 range. So when Apple started selling off in this range around $200 down to 195, I still didn't buy yet because I knew, zooming in on this section right here, that Apple 2 weeks ago was testing 194 down to 193. Although these are thin wicks, this was a point of contention that the bulls came in and supported. So when I started to see this dip buy, I said to myself, okay, if Apple goes down to these lows, I will consider making an entry. But I will only consider making an entry if the 1 minute and the 5 minute line up. So now that you can see, when you have these massive sell-offs, you need to go back to the 1 month, the 3 month chart and take a look. This dip was around May 7th. The next dip that came around retesting this 193, 194 was May 23rd. So that was about a 2-week span. Now that we have correctly marked out a point where Apple has had support, we are going to break down now even further, looking closer in to see, okay, now if it goes to 195 again, I will be interested. Apple was trading around $200, $202, then started selling off. It started going into the 195 range. Did I buy right away? No. What I was doing was waiting for the 1 and the 5 minute to align. Waiting for these targets, looking for support in the previous 2 to 3 weeks gives me confidence when making an entry. So what I did here is I'm going to delete this box because now we know that this is the zone that we were in. And when we were looking for this move, we had to focus on the RSI. So now there's a few factors in play. We're going to look at RSI and volume. It's not easy to pick the bottom when you're looking at these red candles. Let me just delete this for us. When you see these red candles down, these are 1 minute candles. They are big candles. A red candle means that the stock opened up at $199 right here, and it closed down at $195. You don't know if it's the bottom, so you need to use 4 key factors. We first looked at the previous resistance. The second, we are going to look at RSI. RSI is this blue line right here indicated. Less than 30 is oversold. Greater than 70 is overbought. In this case, as the red candles sell off, the RSI starts to dip. What you need to focus on is look at this extreme dip. RSI from right here dipped down from 50. You can see the number right here, this 49. That's changing as I'm moving the key. Went down to 13 here, but I didn't buy here at 198 because we were focusing on the fact that we had support in this area. So I wasn't buying at 198 of an RSI at 13. You need to focus on the previous support levels. So now let's zoom back in and let's look at the next candle. Looking at the next candle, we did not purchase yet because it was trading from about 196 in between 198. which we know support is 193.5 to 194. My entry was in this candle right here, this candle, this fourth one. And I'm going to explain why. The RSI here is 5, but I still didn't purchase. And then the RSI here was 5 as well, and then I made my purchase. So the first thing I do is I line up the 1 minute and the 5 minute, looking at the RSI. So right away I'm getting interested because the RSI is dipping from 13 down to 6, down to 5, and this is within minutes, all right? Each candle's 1 minute, the next minute, the third minute. Now we're in the fourth minute. Then I confirm with multi-alignment using a 5-minute candle. A 5-minute candle RSI must be low as well. So in a 5-minute RSI, and a 5-minute candle, I only have this candle to really focus on. But I purchased right in here. So the RSI was 10 on the 5-minute. So it meets my criteria of RSI being less than 20 in both the 1 minute and the 5-minute. In this case, the RSI was 5 for the 1 minute, and you can see 10 for the 5-minute candle. Now, the fourth point of contention that gives you confidence is looking at the volume. Volume is clutch when you are trying to make a dip buy. I make 2 purchases. I buy twice. So if I'm going to buy, let's say, 100 shares, in this case, I bought many more shares, but I make 2 purchases. Let's say I did 50 shares each. I am going to buy twice with a 1 to 2% stop loss, looking for a move back with the RSI going back up to about 70. In this case, I purchased the first 50 shares in this candle. Why did I do that? Look at the volume coming in. Look at this red bar of volume, and it's increasing with each bar on the 1 minute. You need to pay attention to the volume of these. The selling pressure is increasing as it goes from 201 down to 198, down to 194. And then what happens here is the green volume comes in, and now we're starting to get this indecision candle. You can see you have this thin wick here and this thin wick here, where you have indecision between the buyers and the sellers. Buyers start to come in when you saw this candle. So the 4 things that I'm combining, just to recap, I am looking at the 1 month or the 3 month, whatever shows previous support levels in the past. If you have multiple touches, that's even better. But in this case with Apple, you did have something over here, but the level was a little bit lower, around 190. So when looking at it, I used the 1 month, lined this up, and then lined it up with that second one next to it, knowing that I'm going to buy if we get to that 193, not 194. The next point of contention is I focused on the 1 minute RSI, and I focused on the RSI on the 1 and the 5 minute, comparing both. Then I confirm it with the volume of red coming up. Selling pressure is increasing from this candle bar, this 2nd minute candle bar, to this 3rd minute candle bar, to right here. Green is coming in. There's my first entry, and here is my second entry, because I can see that here's another low of 193.25, as you can see right here. But the green volume is coming in, pushing the stock up. That is how I do the dip buy for the scalp entry. Using the 1 minute, using the 5 minute, confirming my bias, not just buying a fallen knife, but using that previous support that we have found. That is what you have to do when you are buying the dip. You need to make sure that you have areas in the past where there was support. You're not just buying randomly because the RSI is 5 or 10. You need to look back in the past 1 month, 3 months, and make sure there were areas of support. So then when I purchased within this candle, this is the 5 minute, and then I'm selling up here. So I'm buying down at 194, 193.7, and I'm selling up. You can see the high up here. This selling pressure of selling at 196.78. If I were to hold this position and I thought it was a good entry for the day, I would try to focus more on the RSI greater than 70. But during moments like this, where there is great volatility, sometimes it is more efficient to just trade and then look for your re-entry as it goes back down. For example, I bought down here at this candle, RSI at 5, RSI at 10 on the 1 and 5 minute, and I sold up here when the RSI was only 37 on the 1 minute. Because the reason I did that is because of different candle formations you will see. As you start trading more, you can see bear flags, etc. But when you look on the 5 minute and we zoom in right on this, I saw a lot of consolidation, so I decided to take the gains. But using that 1 minute and 5 minute setup enables me to realize that the reason I exited this trade is because if you see a bear flag, but you also have this line, which is VWAP. VWAP is the volume weight adjusted price, which we will get into to break that down even further. But that was a point where we started seeing some stalling and Apple was not getting above VWAP. It was rejecting it. That is this pink dotted line that you see here. I'm going to make this a little bigger just for the viewers so you can see exactly where it was. So here is your VWAP, and then it is rejecting VWAP on the 5 minute. So I decided to take profits, earning myself 2 points within 5 minutes. And that is how I did the 1 minute and the 5 minute dip buying strategy. And showing on the 1 and the 5 minute chart, you can see the pink dotted line is rejecting again on both lines. So you have to have multi charts up, 1 minute, 5 minute, to confirm your bias, looking at the RSI, and not just the RSI, but looking at the volume chart as well to confirm that bias. I hope this helps. Any questions, leave a comment in the section below or message me within the WAP. I'm happy to help you.